And now we want to talk a little bit about the market and the market reaction in terms of both this report and overall. We've seen a downbeat week, but we want to go for some insight into specific stocks. We want to bring in Jared Blikre for some analysis on both the meme stock trade, and he has some other insights for us. He's joining us from the floor of the New York Stock Exchange.
Hi there, Diane. Let's take a look at the Wi-Fi Interactive. I have been tracking Tupperware stock today. It has really been flying. In fact, over the last few days, up more than 300%. That's a 3-month chart you're looking at. The latest news, by the way, this company is pretty small. It's a $250 million market cap, and it's been teetering on the edge of bankruptcy here. Let me see if I can pull up some of these statistics regarding the latest restructuring deal. But the bottom line is they're going to be able to postpone payments to some of their lenders for some period of time. And here are the details you can see on your screen. They're reallocating approximately $150 million of cash, interest, and fees. That's pure gravy for the bankers that the company's going to get to keep. They're extending the maturity of some of their debt, $348 million of principal and reallocated interest and fees. So that's going to be extended into 2027. And PIK interest, that's payment in kind. That means they can pay back without cash. They can pay back maybe in stock or preferred shares, something along those lines. Cash is king. So that will mean a lot to a company that's struggling with bankruptcy possibilities. And then immediate access to a $21 million revolving borrowing capacity. So this just perhaps prolongs things. I don't want to say the inevitable, but anything can happen here. But I think my point is that I've seen a lot of other stocks like this, former meme stock, and it has just been exploding to the upside. A lot of short interest in it, something like 30%, as was calculated a few days ago by S3 Partners. And at these highs just a few days ago, the short sellers had lost about $37 million, which is quite significant because market cap on this stock is only $250 million, $250 million. So let me just show you what this stock looks like on some longer time frames. Here's year to date. You can see, well, a little bit positive there, but then you start extending out 3 years, down over 62%, 5 years. What's this pattern here? It's a deja vu all over again, pretty nasty for both the bulls and the bears. And then you take a look at a max chart. Well, this stock has been down over 99% a couple of different times here from its, 2013, 2014 peak. This reminds me of some other stocks that have also been down 99%. Let's take a look at Sirius Corporation, SIRI. This ticker was actually peaking in the dot-com boom, and very recently, let's take a look at a year-to-date chart. You can see spiked up here, but has come down significantly, as oftentimes happens when you get a short squeeze. Easy come, easy go. Here's Carvana. I'm going to show you a max chart. This stock is also down, was down 99% at its peak. I should say at its nadir there. And you take a look at the year-to-date. It's been holding on to a lot more of its gains than than Sirius. But here's Nikola. Here's another one. You would say, okay, on a 2-month basis, this is a high flyer, up 369%. But then again, on a max basis, this is one of those stocks that peaked over the pandemic and crashed 99%. So my word to traders is just be wary of these stocks. They're going to be getting a lot of interest as they pop up on our trending tickers list, but these are not necessarily the best investments. As we saw with SIRI, that can be dead money for decades.
Oh, I love the insight and advice. Professor Jared Blikre, thank you so much.